Well, good day, everyone, and welcome to today's FS Club webinar coming from London. And we have our special guest today is Christina Yang, representing Shanghai Stock Exchange, but also here in London. And we're going to talk today about cooperation between European and Chinese capital markets, the current status, the prospects, and some of the challenges. Now, you'll know me. I'm Michael Mainelli. I'm one of the directors of Zien. And it really is a privilege to be able to introduce so many of these webinars where we are able to range widely and freely across the world from the comforts of our very own homes, such as the small advantages of the pandemic and the lockdowns. And we can only do that thanks to the tolerance of our sponsors who do allow us to talk about anything to do with technology, economics, and finance. And of course, one of the great themes, certainly of the last generation, has been the enormous rise of Asia and China in particular in economic terms. And who would have thought as recently as maybe even 5 years ago that we would be talking about the importance of the Shanghai Stock Exchange to us here in Europe and here in the United Kingdom. And so today should be a fun exploration of that. Now, those of you who know our format will know that my job is to get out of the way as quickly as possible so you can hear from our expert. And I will do so in a moment after I make three quick announcements. One, Christina has produced some excellent slides and they are available on the website. Two, there will be a recording of this and it will go up in approximately 2 working days, so late Monday or early Tuesday, we would anticipate. And finally, Christina is open to taking some questions, but please do use the GoToWebinar facility. I've already got quite a few questions here as it is. So what I might suggest is if you've got detailed questions, do put them in. She will receive all of them with your emails if you wanted some to inquire about something specific. But really, that's about it. And we're here. Christina will be speaking for about 25 minutes, and then we have about 15 minutes for Q&A. So Christina, the floor is very much yours. Welcome.
Thank you, Michael, for the kind introduction. And ladies and gentlemen, very good morning and good afternoon to some of you. It's a great honor to join you at this webinar. Before I start my presentation, I'd like to know your response to this question. Do you think China will still drive global growth in the post-pandemic era? Michael.
That's great.
Yes, great. That's it.
Open the poll, Christina. Nearly half the audience have voted. Well, over half the audience have voted in about 10 seconds. I'm just waiting for the numbers to come up a little bit further. And then I'm going to close the poll and show you the results. And here are the results. Well,
we really appreciate the involvement of the audience in the poll. And I think there are another two during my presentation. Now, to save time, it may go straight forward without further ado. My presentation today will cover several things. An overview of China's capital market, our cooperation with the European counterparts, and also my personal view on prospects and the challenges that are facing the collaborations between European exchanges and SSE. First, next page. Yeah, great. First, Shanghai Stock Exchange, or SSE, was founded in 1990. As compared with the London Stock Exchange, which you know well, SSE is extremely young. LSE has over 300-year history, while we just celebrated 30th anniversary last December. But the last 3 decades have witnessed SSE's continuous growth in market capacity, product variety, and international influence, as Michael mentioned just now. Our development experience is featured by reform and opening up, along with continuous innovation and expansion. Next page. There are 2 stock exchanges on mainland China. By the end of May, more than 4,300 companies were listed on both Shanghai and Shenzhen, with a total market cap around 85 trillion RMB, approximately 9.5 trillion GBP. You can see the SSE got started with only 8 listed stocks in 1990, with a small market cap around 140 million GBP. At the end of last year, 1,800 companies were listed on SSE with a total market cap of 5.12 trillion GBP. Well, these are accounting for almost 60% of the Chinese Asia market. SSE achieved a brilliant performance last year. Among all the WFE members, we rank number 2 in terms of capital raised, following the NYSE. SSE also ranked number 3 and number 4 respectively in market cap and total turnover. Next page. SSE market covers equities, bonds, funds, and derivatives. For the equity market, we have main board and stock market. The main board is where blue chip companies listed and traded. Currently, more than 1,600 companies are listed on the main board, with a total market cap around 4.9 trillion GBP. These blue chip companies have been playing a very important role in Chinese economy and social development. Last year alone, they generated a total revenue of 4.3 trillion sterling, accounting for 38% of China's GDP. 76 of these main board companies are on the list of Fortune 500. Just on the right of this slide, you can find the spread of SSE main board companies. They are mainly located in the Yangtze River Delta in the east, the Fragrant River Delta in the south, and around the capital city of Beijing. Next page, please. The SSE stock market is where the high-tech and innovation companies cluster. The stock market was launched in June 2019. So just in 2 years, now 288 companies have listed on the stock market with a total market cap around 453 billion sterling GBP. Yes, these stock companies have displayed a strong performance already. Their year-on-year revenue increased 71% in the first quarter this year, and the total net profit rocketed 260%. Very impressive, right? Well, I'm proud of that. The faster growth stock companies are from the biomedicine, new energy, new generation of information technology, etc. The average R&D spending of the stock companies accounted for 12% of their revenue last year. You can find on the data yourself. They also boast of numerous new intellectual property rights and patents. Next page, please. China's bonds market have developed fast in the past few years. It's the second largest in the world. By the end of last year, overseas investors holding of RMB bonds in China had reached 3.34 trillion RMB, accounting for 2.86% of the total outstanding bonds. The first quarter this year, overseas investors holding increased to 3.4%. The exchange bond market is relatively small as compared with the interbank bond market. SSE bond market keeps growing in recent years. The outstanding balance at the end of December last year reached 1.47 trillion GBP, of which 0.5% was held by QFII and RQFIs. Next page, please. Various bond products are available on the SSE market. This year, SSE has taken some new measures to boost the bond market, such as to introduce public rates products and carbon-neutral green bonds, etc. It's worth mentioning that the first batch of 5 infrastructure public rates projects were approved by the SSE and registered with the securities regulator this May. This is a part of China's efforts in innovating infrastructure investment and financing mechanism. These rates projects involved in toll roads, industrial parks, warehousing, logistics, and sewage treatment. Commercial properties are not included at this stage. Next page, please. The SSE fund market and the derivatives markets are very active. They are small. The fund market has expanded quickly. Now 440 funds are listed with an aggregate market value of 119 billion GBP and a daily turnover of 668 billion GBP. The SSE derivatives market started late. It was in 2015 when the first SSE 50 ETF option was introduced. Last December, the CSI 300 ETF options were launched. They are all very popular among investors. Next page. There are various routes for international investors to access China's capital markets. Well, I'm afraid the slides are a bit crowded. Next page, please. Next page. And next page. Yes. Well, I think here's where we might go. Here. While you can run the poll while I explain a little. These are the main routes that international investors can access China's capital market through QV, RQV, Stock Connects, ETFs, benchmark indexes like MSCI, FTSE, Russell, S&P, Dow Jones, etc. Yes, please, the audience would do the poll. And I will explain later some important channels or the routes you can access the Chinese Asian market.
That's great. Christine, could you just explain the acronym QFII and RQFII to the audience?
Yeah, QFI, the Qualified Foreign Institutional Investor Scheme. That's the QFI. And RQFI, that means RMB, Qualified Foreign Institutional Investors. That means the foreign institutional investors can invest in China, what's a foreign currency or RMB. Great. This is a scheme started in 2002, and it's a I think it's a very important scheme that allows the foreign institutional investors to access China's capital market, and they are playing a really important role. Next page, please.
So as you can see here from the results, Christina, the bulk of people believe that they would go via the Shanghai Shenzhen Hong Kong Connect or the Shanghai London Stock Connect. But
great. Wow. To my surprise, I thought they would choose the QFI and IQFI. Great. Now, we are on the next page, please? Yes, here we are. Shanghai Stock Exchange, a showcase of China's reform and opening up efforts. During the past 2 years, various reform and openings up policies are phased in on the Shanghai market, such as the launch of a star market, the reform of a registration-based IPO system, and the introduction of infrastructure rates. Our opening up efforts can be simplified as 3 links, namely the trading links, the financing links, and the product links. These 3 links help connect the Shanghai market with overseas market, enable international investors easier and more access to Asia market, and benefit from the growth of Chinese economy. Last year, stocks held by international investors reached 3.41 RMB, accounting for 4.27%. Yes, of total market cap of A shares. Since time is limited, SSE has attached great importance to cooperation with our counterparts around the world. Yes, here. Until now, we have concluded 64 MOUs with 53 foreign institutions. We have around 20 partners in Europe. LSE is among these MOU signatories, and we're the first one, actually. We have a long cooperation history, and we trusted each other very much in our business cooperation. Other partners like Deutsche Börse, Euronext, Luxembourg Stock Exchange, Swiss Exchange, these are all important partners in Europe. Next page, please. Our cooperation with European exchanges falls into 3 categories. The first category, cooperation under MOU framework, with a focus on personnel exchange and information sharing. March this year, the heads of Belgrade Stock Exchange and SSE signed an MOU The signing ceremony, the picture you find here, the signing ceremony was held virtually. This is the first partner we have in Central and Eastern Europe. The second category is cooperation was a focus on market links. We have launched Stock Connect with the London Stock Exchange and opened a green bond channel with the Luxembourg Stock Exchange. The third category is an all-round cooperation based on equity investment. SSE has invested in several stock exchanges around the world. In Europe, CNEX is such an example, I think. It's a joint venture established in October 2015 by SSE, Deutsche Börse Group, and China Financial Futures Exchange. The SSE has 40% stake in this joint venture. Currently, 42 cash products are available on CNEX with a total trading volume around 50 billion RMB, approximately 5.5 billion GBP. We also work with Deutsche Börse to develop financial products, IT systems, and promote information exchange, etc. Next page, please. I'd like to explain a little for those who do not know well about the Shanghai London Stock Connect scheme. It's a connectivity mechanism links the Shanghai and London markets. At the initial stage, the Stock Connect allows eligible companies listed in each market to issue depository receipts on the other exchange. I think the European investors are familiar with global depository receipts in London. This connection is realized through fungibility, designated brokers on both sides, and regulatory cooperation. It's a joint vision between China and the UK aimed at building up a sound financial ecosystem between our two markets. It's also regarded as a part of a broader desire to enhance financial cooperation between the two markets and strengthen bilateral ties between our two countries. I remember that His Excellency's UK Chancellor Hammond and Chinese Vice Premier Hu Chunhua presented at the launch ceremony 2 years ago. Yes, actually yesterday, 2 years ago, it was the launch ceremony. Next page, please. The Shanghai London Stock Connect includes a two-direction business. The eastbound business allows LSE-listed companies to list Chinese depository receipts on the SSE main board. In the westbound business, the GDRs representing the shares of an underlying SSE company will be listed and traded in London. There are some key features of CDRs and GDRs. This Connect scheme represents a number of firsts, I should say. For the first time, global investors are able to access China's A-shares from outside Greater China. It's also the first time LSE-listed eligible companies can access Chinese investors directly in mainland China. Yes. Well, since the launch of Stock Connect, westbound business is going on pretty well. You find on this page the Huatai Securities, CPIC, CYPC, and SDIC have successfully issued GDRs in London, raising a total of $5.83 billion US. More information you can find on this page. Personally, I think they are worth to be considered in your investment portfolios. By the way, more Chinese companies are coming in the pipeline for the westbound business. Yes. Here on this page, you can find more benefits for the CDR issuers. Most importantly, they can have the opportunity to tap the fastest growing, highly liquid, highly valuated A-share market. By listing in Shanghai, CDR issuers will access the second largest equity capital pool in the world and high quality investors. By the way, the quantity, the Chinese market has the largest population of investors. More than 260 million investment accounts were opened, larger than the total population of UK, Germany, France, and Italy. But it's regretful, I should say, that many eligible LSE-listed companies today are still taking the wait-and-see attitude. I was told this is typical British. I mean, it's not surprising that companies want to be the second CDR issuer instead of the first one. For those who have interest in listing CDRs in Shanghai, please feel free to contact SSE London office. I would be very happy to answer your questions. And I would be like to organize any workshop if you would like to meet my colleagues in Shanghai or to speak with the regulators. Next page, please. Well, in this part, I want to share with you why there are advantages for cooperation between European and Chinese exchanges and what are the prospects for future cooperation. I have to make a quick disclaimer here. The opinions expressed at this webinar are solely my own and do not reflect the opinions and the beliefs of Shanghai Stock Exchange or any Chinese government agencies. With disclaimer, we can go on. Personally, I think it's time to invest in China, to invest in SSE-listed companies. Why? The answer is very simple. We began the poll, right, with my presentation. China drives global growth. According to IMF, China economy has contributed 1/3 to global growth since 2009, larger than the combined shares of global growth from the US, Europe, and Japan. China is the only major economy with positive growth in 2020. The first quarter this year witnessed 18.3% growth in our economy, the highest quarterly record since 1992. According to the Bloomberg, China will contribute more than 1/5 of the total increase in the world's growth in 5 years through 2026. And the SSE companies stood for 40% of China's GDP last year. They generated 10.4 trillion RMB in revenue in the first quarter this year, 26% year-on-year growth. So, conclusion. Global investors should not miss the opportunities to share China's growth. The performance of SSE companies has proved that investing in China through SSE-listed companies a wise choice. And next page, please. There are obvious advantages and prospects for cooperation between European exchanges and the SSE. Firstly, I listed several points here. Firstly, China and Europe have shared interest in geographical perspectives. Both are important players in the multipolar world. Both are equal and open, not targeting any third party or controlled by anyone else. Both need the other side and want to work with each other to promote public good and sustainable development, particularly to address the challenges facing humankind, like climate change, environmental protection, global economic governance, and free trade, etc. Secondly, strong economic ties between Europe and China provide optimism for future cooperation in the financial sector. Last year, the volume of bilateral trade in goods and services approached in $1 trillion, while the aggregate two-way investment topped $250 billion between Europe and China. Europe is now the most important destination for Chinese companies' foreign direct investment. EU is China's largest partner in trade, both import and export. China is the EU and the UK's second largest trade partner. Close business relations demand an improved financial ecosystem between Europe and China. I think in the post-pandemic and post-Brexit era, we can expect more investment as well as demands from European and Chinese businesses. In the sectors, I think like life science, healthcare, green and renewable energy, fintech, globalization, digitalization, etc. Certainly, our capital markets are complementary as well as very similar. This provides us very good foundation for collaboration. The evolution of the European markets is not quite even from my observation. The continental Europe, both very mature markets in the western and the northern part, there remains emerging markets in the east and middle Europe. London is an international financial center. So here, to SSE, we have experienced a lot during the past 30 years, and we have accumulated both experiences and lessons, very painful lessons. So these are worth sharing with our counterparts in emerging markets. Last but not least, the Belt and Road Initiative. It has attracted global participants to collaborate in the region. So it is important that stock exchanges in the region also work together to optimize the resources allocation for the region. I assume both SSE and our counterparts in Europe would be happy to collaborate in many areas, like personnel exchange and the information sharing, technology upgrading, new product development, and equity investment, etc. Next page, please. I'm conscious of the time, so just skip it.
Okay.
Okay, next. Yeah, here we've got to post 3. Are you optimistic about the future success of Shanghai London Stock Connect?
There we go.
Yes,
So
please. Here we
it's an
go.
opportunity for our audience to give us some feedback on what you just said, which is clearly very interesting. I'm going to leave the poll open for just a few more seconds. Just get
Yes.
most of the audience voted, and I'm going to share the results now. And you've got a very optimistic audience.
Great. Thank you, the audience. You are a large portion of the audience is quite optimistic. Great. Next page, please. What are the challenges facing us in promoting European-China cooperation in capital markets? In my own perspective, I have to say it's my own perspective. Okay, any cross-border cooperation will inevitably encounter difficulties and challenges, such as time-consuming procedures, misunderstandings caused by cultural differences. I personally experienced a lot when I arrived in London, and also other things like disparities in legal systems and business practices, and protectionism and negative public attitudes, etc. So I think similar challenges also exist in cooperation between European and Chinese capital markets. Besides the COVID-19 pandemic, Brexit legacy, development of new technologies and their applications, all these factors will bring us new challenges as well as opportunities. Well, so much has been said. I myself is very optimistic about the future cooperation between SSE and our European counterparts. That's all for my presentation. Mike, back to you.
Well,
here, just stay a few minutes for this page. That's contact details for SSE London office. Thank you.
Thank you, Christina. That was a wonderful run through of a very complex area and tremendous. Such growth over 31 years. That's just absolutely phenomenal. Now, we've got quite a few comments and questions. Richard Priest, for example, agrees with you very much on the challenges that are faced. He says with a move to a more complex relationship between Western countries, climate change, competition on technology, alternate supply chains, and confrontations over rights and rules basis, so definitely there. But we've got first question here, funnily enough, related to a question you and I spoke about earlier, actually comes from Su Fun Hui, but he's basically, what could you just explain the main differences between Shanghai Hong Kong Stock Connect and Shanghai London Stock Connect, please?
Oh, of course. Yeah, sure. I'm happy to answer this question. Well, actually, you can go back to the right slide. It may be, which side? It's page 17 or something.
This here?
No? What? No? It should be.
Where would you like me to go, Christina?
There's a comparison. It's a page, maybe page 17. Go back. There's yes, page 17. There's a slide. It's about the route for international investors.
Okay.
Actually, I made a comparison between these two stock connects.
Just trying to find it, Christina. Signatories.
No. These.
Way
You
back.
should go back to way back page 17. No. Well,
Nope.
you mark differently. Let me see. It's which? It's right before the poll 2, I think.
Right before poll 2. Okay.
Yes, you find it. It's right before the poll 2, I think.
We're just moving to that. There we go.
Yes, here it is.
Okay, sorry.
So you look at this page. It's as I mentioned actually in my presentation. In recent years, SSE's opening up efforts are focused on 3 streams. Remember, they call it trading links, financial links, and product links. So here, Shanghai Hong Kong Stock Connect is a perfect example of a 2-way trading links. Shanghai London Stock Connect is to achieve financing link, which allows issuers to raising funds on the other market through the connected mechanism. So this is, I think, the major difference between the 2 stock connects. And you can find on the comparison purpose, these 2 stock connect schemes are different in other ways, mainly in 4 aspects: primary market activities, cross-border trading, eligible investors, and eligible securities. Some of you may be familiar with how Shanghai Hong Kong Stock Connect works for the international investors. I just go through very quickly. The shares are listed in Shanghai. Investors who use the Shanghai Hong Kong Stock Connect should be the Hong Kong Stock Exchange members or their clients. So these investors can trade the eligible securities directly in Hong Kong market with the help of a trading link set between mainland and Hong Kong. Clearing and settlement are centralized by Hong Kong SCC and China Securities Depository Clearing Corporation. The constituents of certain SSE indices like SSE 180, SSE 380, and SSE Star 50, and certain A plus H shares are all eligible securities for international investors in the Hong Kong Connect. Then what if you want to invest through Shanghai London Stock Connect? LSE members and their clients are eligible for trading the GDRs available on Shanghai segment of LSE. Currently, as I mentioned, 4 GDRs are available on LSE. These 4 GDRs are issued by the Chinese company, the SSE listed companies. So investors just follow the London rules. They can buy and sell GDRs as they do with any shares available on the LSE. The investors just place orders with eligible brokers who execute the orders. The orders are settled by respective custodians. So in Shanghai London Stock Connect, designated brokers are enabled to trade directly in each other's market. I hope this answered the question.
Yeah, I think that's very thorough. Trevor Hilder and others out there will remember American depository receipts. Then we have global depository receipts, and now we have Chinese depository receipts. And in some ways, Christine, I'm always amazed that more people aren't aware of this, and particularly, British CFOs, chief financial officers. This is an opportunity to pursue fundraising in China using a mechanism that we thought was really exciting back in the 60s. The analogs are extremely strong. Anyway, just on another question, if I might, Christina, the star market. I mean, that has grown remarkably fast, as we've all noticed. In your opinion, what has done that?
What has done that? Yes, of course. The stock market has grown very fast in the past 2 years. Since its launch in July 2019, this market has become one of the largest IPO markets in the world and a premier listing venue for prominent Chinese unicorns. Unicorns refer to those privately held startup companies valued over $1 billion US dollars. So in China, there are lots of these unicorns. Last year, stock market IPOs accounted for 47% of capital raised across China's Asian market. I can say the stock market has captured the passion of many global investors.
Good. Now, many global investors think ESG disclosure is a big issue, as you're very aware, and we've had a number of webinars about environmental, social, and governance issues. Is ESG disclosure mandatory in China, and what is SSE doing to promote ESG disclosure by public companies?
Yes, I completely agree. The ESG disclosure matters in investment decisions, and we welcome global investors to have Chinese assets in their investment portfolios. For the ESG disclosure in China, there are currently no mandatory ESG disclosures. Although the regulator requires all the public companies to disclose information that may be material to investors, including information on ESG-related risks. I remember last year, the new the new edition of the Code of Corporate Governance for listed companies in China was published, and it established the ESG disclosure frameworks for public companies. For SSE, we have tried every effort to raise ESG awareness for the public companies and also for the investors. At the same time, I can give you a very brief introduction of what we have done. SSE released a guidance rule on listed companies' disclosure of environment-related information back in 2008. Since 2009, companies fall into three categories, have been required for submitting CSR, corporate social responsibility reports in their annual report. Last year, all the companies listed, starting from last year, all the companies listed on stock market are obliged to disclose the CSR information. And very soon, the SSE new ESG guidelines are coming out soon. And that means the Chinese listed companies are not only obliged to follow the rules that's related to environment, but also other things, other non-financial informations related to governance and social responsibilities are required to be disclosed by the companies very soon. And SSE also take measures to facilitate financing. The very important function for a stock exchange is to facilitate financing. So here we have encouraged the companies to go listing for environmental friendly companies, and they encourage them to involve in those green projects. 5 years ago, I think, yes, SSE started a pilot program of BRI green bonds, supporting financing for green BRI projects. And last year, 19 IPOs were approved and raised funds successfully for new generation energy and environment protection companies. I think I mentioned in my presentation, we also have green bonds and carbon neutral bonds listed on our market. Well, you see, in China, we usually have those vision and action plan. SSE also mapped out our green finance vision and action plan back in 2018. I think up till date, that action plan was well delivered.
Yes, we had a webinar on the new 5-year plan and the green prospects for China, very much in line. And of course, in that presentation, there was the importance of the capital markets. Had a few comments in here as well about BRI and infrastructure bond issuance. But Bob McDowell makes an interesting point here. that he believes that domestic Chinese stocks might be a hedge against inflation. Chinese government and treasury, managing the inflationary pressures that are growing in the Western environment and demonstrating sort of effective management of the renminbi. So Bob's clearly pushing people to look at that. We've had some other interesting comments as well. Julian Damon is wondering a little bit about that 20% expected growth, and what were the drivers of that. But and Hugh Purser makes an interesting point as well, that is China's future economic growth going to come from the domestic or international, and what are those proportions? So all in the trade. But in the time available, Christina, we've got time for just one more question. And I think it'd be really interesting to our audience to hear it from you. You've been here for 3 years, but in your opinion, Christina, what do you think are the Western investors, biggest misunderstandings or top misunderstandings about China?
Well, very good question. A bit tricky. I hope I won't offend the Western investors. My job is to provide a service to our Western investors. It's very difficult to guess what are their top misunderstandings about China. I think, may I answer your question in this way? As Western investors, you need to better understand the fundamentals of China's economic growth, including its a potential impact on the world economy. I've got 3 minutes, right? I want to share with you an article I read the other day. I read an article online. The author, a Mr. Andy Rossman, writes something like that. My perspective is based on almost 40 years experience, the first as an American diplomat and then a financial analyst, including he has a 20-year experience based in China. And he wrote in the article, several things are often misunderstood by Western investors about China. And I totally agree with him. I try to speak from my memory. The first and the largest misunderstanding are, the Westerners believe that. Yes. I think the first misunderstanding, I mentioned it, that many Western investors were not aware that China drives the global growth. They have little direct exposure to this driver of global growth. I think this is a misunderstanding about China's economy. And another misunderstanding is they think China's economy is still driven uh, by called manufacturing and public infrastructure building. No, that's quite a misunderstanding. China today is rebalancing for sustainable growth. Consumption, you mentioned consumption does not yet play as large a role in China's economy as in most developed countries like the US. But this transformation toward a domestic demand-driven economy is well underway and will continue, I believe. And China's dynamic service sector provides investors with opportunities similar to those in the US market. And I think that Mr. Rossman also mentioned other misunderstandings by the Western investors. Another one, very interesting. He thought many Western investors still hold that Chinese people work for the state. That's not true. This point is very often overlooked. China today is really very entrepreneurial. Actually, private-owned firms drive job creation and innovation. I remember in my presentation, the star market companies have introduced lots of intellectual property rights and patents, right? And also, statistics show that private-owned firms contributed to 50% of the tax income for the state treasury, 60% of GDP, and 70% of innovation and patents, 80% of employment opportunities in urban China, and also 90% of all the number of enterprises in China. So I could remember that these numbers very clearly, from 50% to 90%. These are the contributions by those private-owned companies. And it's a joke in China. Everyone wants to be an entrepreneur, especially with young people. Well, I think China, anyway, is the world's best consumer story. So if those who do not believe in that, that might be the biggest misunderstanding about China.
Well, that is extremely helpful, Christina, and we've got a lot of comments here showing that people are beginning to realize that perhaps their estimation of the Chinese economy is just a little bit behind where it currently is, very much in that state of transition. Xu Fenhui makes an interesting comment I will pass on to you about Chinese consumers in the European luxury market. And Anthony Rowley, dialing in from Tokyo, is curious about the future really of infrastructure bonds on the SSC financing Belt and Road. So we've got a very complex economy, well beyond the manufacturing economy that too many of us are looking at from 10 or 20 or 30 years ago. So it's very good of you to bring this to our attention. The scale of SSE, when you lined it up at the very beginning against the other major exchanges in the world, was also quite phenomenal. And you've laid down this great challenge about CDRs, Chinese depository receipts. And so I would encourage our CFOs here to approach you if they want to access the Chinese capital markets. And we are anticipating great opportunities to invest in China via the Shanghai-London Connect coming back the other way. We could go on for hours, I know, but fortunately we have come to time, and a number of people thanking you for a very informative presentation. If I can just wrap up with 3 quick rounds of thanks. Firstly, to our sponsors. I hope this is very much up your street, certainly up ours. It's been fascinating to hear about the current state of China as opposed to the past. And to keep you up to date, to the audience, thank you very much for your comments and questions. We have, starting off next week, another interesting and unsung area, but the ethereal elements of balance sheets. And I won't give away the very first and demanding poll, but Trevor Maynard from Lloyd's is going to look at how do you ensure balance sheets that are full of assets that you can't kick or touch. And on we go with a focus on Busan on Tuesday, also on Asia, impact investing, and an interesting session on fraud and pandemics. So lots to go for. But Christina, I must thank you. It was extremely kind of you. And I'm conscious that you put so much work and preparation into this. It really came across well. Unfortunately, technology does not allow me to open the floodgates of applause. I have something from the East. I'm afraid it's from Korea and not from China, but it's my Korean karmic clapper. And I use this to substitute for applause. So thank you.
Thank you. Thank you for having me at this webinar, and thank you all the audience. And I do hope that my presentation is useful for all of you.
Thank you.
Thank you.